This is your LMAX exchange technical update for Thursday, June 1st, 2017. Euro dollar. So the euro continues to remain very well supported on dips, with the market now focused on a test of fresh 2017 highs and retest of the August 2016 peak at 113.67 further up. At this point, any setbacks should be very well supported, with only a break back below recent support that we saw around 111.10 to take the immediate pressure off the top side. Sterling dollar. So cable continues to consolidate above some previous resistance at 127.75, and right now we've seen a shift in the structure that now puts the focus over the medium term on fresh upside towards the next key measure move extension at 135. At this point, if we see any setbacks below 127.75, they're expected to be very well supported in the 125 area, ahead of what should be a continuation of gains back towards recent highs and again up towards that 135 extension. Ultimately, only back below 123.60 would compromise the newly adopted constructive outlook for cable. Dollar yen. So dollar yen has been pressured to the downside in recent sessions, and this could open the door for a fresh extension back towards a retest of the 2017 low just ahead of 108. At this point, it would take a break back above 114.37 to take the pressure off the downside. Euro Swiss. So Euro Swiss continues to show signs of topping out since the market stalled out ahead of that psychological barrier at 110, and if the market does continue to roll over, it puts the pressure on the downside for a retest of those critical lows that we've seen in 2017 just ahead of 106. At this point, only back above 110 would force a shift in the structure. Aussie dollar. So Aussie has been showing signs of topping out over the past few months, and the market now is looking for the fresh lower top ahead of a next major downside extension to be confirmed on a break below recent support around 73.30, which would accelerate declines back towards the December 2016 base at 71.60. At this point, only back above 76.11 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD, despite recent setbacks, remains highly constructive, and this latest pullback is now expected to put in a higher low ahead of a continuation of gains to fresh 2017 highs beyond the recent 2017 peak at 37.94 and towards and through the 140 area further up. At this point, only back below recent support that we'd seen at 33.88 would compromise the immediate bullish outlook. Kiwi dollar. So the New Zealand dollar has pushed through some important resistance around 71, though the market has been unable to establish above the level, and at this point it will be interesting to see if we can see an establishment or a close above 71 on Thursday, which would suggest that we're seeing a more significant shift on a short-term basis, exposing more upside. But if the market is unable to establish a close above 71 on Thursday, the pressure does remain on the downside, and there's a risk for a more immediate bearish resumption back towards the 2017 low at 68.18, below which would expose a fresh drop down towards the 65 area. SPX 500. The S&P 500 is pushing to fresh record highs, and although we've seen a minor pullback off the recent record high around 24.18, the pressure does remain on the top side, and there is risk for a continuation of gains towards what is now a measured move extension in the 24.80 area. At this point, it would take a break all the way back down below 23.22 to take the immediate pressure off the top side and suggest we're seeing the possibility for a more meaningful structural shift. Gold. So gold continues to trade higher, with the market putting in higher lows over the past several months, and a recent higher low now projected in the 12.15 area, which will be confirmed on a break above the 2017 peak at 12.96, exposing a test of the 2016 high at 13.75 further up. At this point, look for any setbacks to be very well supported, with only a break back below the 12.15 area to compromise the constructive outlook for gold.